Alex, how you doing?
I'm doing great, James. How about you?
You ready to talk stocks and more?
Let's get to it.
All right, well, this one's going to be a little fun. We've decided to periodically do a little market update and discussion about the market, as well as continuing taking a look at my portfolio. If you recall, I made an AI portfolio. I'm excited. How about you?
Yeah, I don't know if excited's the right word for what just happened to us as investors this past week. We kind of had a crazy one.
Yeah, most definitely. I'm assuming you're referring to the pullback we experienced with not only indexes dropping, but a whole heck of a lot of AI related semiconductor chip stocks took a haircut.
Yeah, we saw really good jobs report come out that you would have thought that would actually be helping the market. I remember actually I think Trump tweeted something about like how he didn't understand why a good jobs report didn't send the market up. That just shows that you're not really learning how stocks work. You know, stocks are built on the future, not exactly what's happening right now. So I think this week you figured out really quick, am I a short-term panic investor or am I a long-term investor? And I just have to assume that this is just a blip on the radar and maybe start looking for buying opportunities.
Yeah, that was very interesting to watch. And it was funny for me personally. It exposed a little bit of my own investing lack of discipline or growing discipline and fears. It's funny, I experience typically more FOMO or fear of missing out or maybe envy and greed as the market has been climbing over the last few months. As you know, I only had a certain amount that I had committed to this portfolio.
Yeah.
So we made some good stock choices. We'll review them in a bit. But as it was continually to climbing, I was like, shoot, I wish I would have, invested in MU, or I wish I would have got into DRAM earlier. I wish. Knowing that I'm going to hold on to it long term, but and then with this weekend or this past week with it pulling back, it wasn't as big of an issue. Though you're kind of like bummer, all those gains are no longer as many gains. So that was interesting learning thing for myself. I don't know if you've ever experienced that.
Yeah, this is something that's really important for new investors that you can really figure out really quick if you have a plan. Because if you don't have a plan and something like this happens and all you've been doing is chasing FOMO up, you probably got really burned this week.
Mm.
And if you had a plan and you would have been like, okay, well, I don't need to chase that because, I'm doing my passive investing and realize I have a good strategy moving forward, you may not got burned so hard. So this was a reminder that stocks can also fall just as hard as quick as they can also go up. And this was a really big reminder of that this week.
Yeah, so with your research and what you saw, what were some of the contributors? What do you think happened?
Yeah, I think the jobs report came out as really good news. That led itself to will there actually be interest rate cuts in the future? And then I think the third piece was that we were going in a really hot AI trade as we've been on. Anything you buy AI related, it feels like it's been going up. So everyone has been a genius recently with picking AI stocks. And I think all that came to a culmination of like it was just time for a little bit of a sell-off here. So I'm not panicking over last week. I think it's actually really healthy that this pullback happened because we can't just have things infinitely go up. That's when the AI bubble will actually come to fruition and things will crash. I think it's really healthy that things pull back. And it's going to be interesting to see what happens this upcoming week from there because it'll start showing like, are people selling to and in like a panic mode, or are we going to continue to see selling going in the next week?
Yeah, and you mentioned this in this week's video, the other video we just released, as we talk about IPOs and SpaceX. And one of your ideas was that um, investors may be liquidating some of their current profits to allocate money for that IPO. Do you think part of that was contributing?
Yeah, I think it's ironic that we might be seeing that, especially at the end of the week, because if I have I'm already in my mind of like I want to invest in SpaceX, but I have all of my money invested in other AI, and like let's assume that I've been maybe like YOLOing and FOMOing in, as we've seen, I might be out of money. And so what happens is I need to start selling. And when I hear bad news, if I'm not having a strategy to follow, I'm probably gonna hit the sell button really quick. Everyone's like looking for an excuse to sell. So that's, I kind of think we're kind of gonna start seeing that. And that's why I expect as we get into the next week here, we might see a little bit of a continuation. I'm not expecting too much of a bump until we see what happens after the SpaceX IPO.
All right, that's interesting. So you think that's one of the reasons. Any other thoughts on what happened here? What's your or let me just ask you that. Any other thoughts of contributions?
I think those are the main economic ones right there.
Yeah,
Again, we're up so much that it's important to keep in mind how far we've come. You
yeah.
know, it's not like we haven't had just 1 or 2 weeks. I mean, we've had many weeks in a row of AI basically going straight up. So it was definitely time.
Time for a correction.
That's right. Yeah. And I don't even know if I would necessarily call it a correction. It was time for some selling and for things to kind of cool off again.
All right. All right. Well, you'll see when we look at my portfolio.
Yeah.
Definitely hit some of that pullback, especially on um, some of the chips in RAM. RAM specifically, memory took a bigger hit, a little bit on
It
software as
did.
well.
Yes. I think a lot of the stuff that has been really hot, we saw some of the biggest pullbacks. In other stocks that are up just a little bit, we're not seeing as much. So, like, yeah, if you were in Micron or SanDisk, those are some of the ones that took some of the bigger cuts.
Yeah. Great. All right. Well, that was the pullback or this past week. Certainly will be interesting. I think the big ticket item coming up this week happens on Friday, which I think in itself is unusual for a company to IPO on Friday, but SpaceX is IPOing on Friday. Initial thoughts?
Yeah, I mean, as a new investor, this has got to be one of the craziest moments for anyone to go through. I mean, this is the biggest IPO that there's ever been. And they lined up that price. I think it was at 135 is the final number, putting it at a $1.77 trillion valuation. That money has to come from somewhere. Like people can't just like, click your heels together or snap your fingers and have money come out of nowhere. There's going to be a lot of money flowing into it. And so it's going to be wild to see how the market reacts from there.
Yeah, you're indeed correct there. Now, I did, incidentally, I think I told you this. Robinhood had an allocation to offer its
Yep.
users. So I submitted for one, one share, and I think
Got to
it could go,
start somewhere.
yeah, and so if I take a huge haircut, I just won't eat for a meal or two
There you
and
go.
kind of get that back. But I did want to participate um, as well. It doesn't take much to kind of relieve that FOMO itch. But so I got my one share, so we'll see how I do. I don't plan on selling it immediately, of course, but we'll see. So that's interesting. Uh, I do know too, though, like for instance, if you're in the ETF NASA or some others, including potentially within 15 days the NASDAQ, SpaceX will be in those as well. Is that correct? Keep me honest here.
Yeah, so I mean, if you own the Nasdaq, you're going to be basically owning SpaceX, regardless if you buy it specifically yourself. So I think it's a good idea to, if you, especially because I know that you're kind of like on the learning journey. This is going to be a wild ride because you've got half the people saying that it's going to double overnight, and then you've got half of people saying that thing is way overvalued and it needs to crash 50%. I think the truth will probably lie somewhere in between. And that's why, in general, I recommend new investors kind of just watch from the sidelines, just because there are other bets that we can make that I think you could get really good returns on. And like we mentioned in other videos, people selling other stocks to create money to invest in SpaceX is going to create opportunities within the companies that they're selling. So that's where my eyes are going to be.
Yeah, and the easy way to see if that's happening is just their stock price would lower or dip in this period?
Yeah, I mean, from a high level, knowing that a lot of these companies have not had any news shared. So if I just had a company that had amazing earnings, like an Nvidia, and I start seeing it get penalized and just selling off for no reason, just getting caught up in a market sell-off, that's how you start identifying opportunities out there of that last quarter was amazing. No news has changed since then. In fact, in that instance, we just had the conference out in Taiwan that had lots of good news. Those are the companies I want to start buying more of as they pull back because I feel really good about those and know that they're not going down just because there's something wrong with the company. They're going down because there's other factors at play. Those are the best companies to invest in.
Right, right. And thinking about your plan that you've kind of outlined in many videos, uh, you talk about having a little bit of a resource, a little bit of dry powder to leverage and use. Uh, maybe a portion of what you're already dollar cost averaging, some funds to invest. So it'll be timely, right? You're keeping your eye out to see where those on sale type opportunities are across the stocks you like.
Yeah, that's exactly it. Like I'm a big fan of I keep my passive investments going,
Mhm.
regardless of what the market is doing, I have my passives going. But it's times like these where I figure out maybe I need to allocate more than just the passive to do some one-time buys when things pull back. Like another company that had a massive pullback is Broadcom. I mean, they were down heavy double digits and they did miss on their revenue, but they kept their forecast for AI going forward. So the good story continues to roll and they're going to be up, triple digits in their AI chips. Those are the kind of companies that I love buying after we see some really heavy selling because they're just they've already told us the news, and so it's just dealing with the market reaction after that.
Right. Yeah, so your take is likely the volatility will continue in this week till we get beyond the IPO.
That's right. So I think a great plan for investors is to have companies researched and ready to go that you feel strongly about, and then see if they get caught up in the selling. And then those could possibly be opportunities for people to pull the trigger on.
Right. Or when you're already in, that you could get a nice extra portion at a lower rate.
That's exactly it.
Yeah. Perfect. Perfect. Well, cool. Thanks for sharing. Obviously, this item and the pullback kind of dominating the news reports this week, along with the job reports. Um, the Fed likely not lowering interest rates, given it, and all those things that impact stocks in the market. Uh, Continuing our discussion, maybe if it's okay, to give you an update on my portfolio and some of the near term impact of the pullback on it, and we can continue talking. Does that work?
That works.
All
Let's I'm ready to see the updates here.
right. Oh, I'm always a little slightly nervous. Before we actually open up my portfolio for review here, Alex, we actually do it, review it for the first time in another video. I'll put it up here so you guys can check it out. But I encourage you for all the upcoming videos, especially as we periodically do this video, a market update as well as portfolio review. Like and subscribe so you can be aware of that as those come out. Um, so let's dive in, Alex.
Sounds great.
All right. So hopefully you see my portfolio here.
Looks good.
Okay. So um, few changes. Let me start at a high level. I sold some stock and I bought some stock.
Yeah.
And so first update there is I had bought Tesla fairly high at like 438 and it spent a lot of time under that. I waited till it came up and just realized I'm not quite ready for Tesla yet, and there seems to be better opportunities. So I went ahead and sold my position in Tesla.
Okay.
I also sold Intel and AMD. It was
Both of
kind of
those have
a
been on really big runs as well.
so Intel, it ended up being with this pullback specifically, ended up being net positive. Definitely made. I think I was over 100% because, as you know, I got in early before they had their parabolic climb a month or
Yep.
two ago. I didn't have a huge position, but I sold that, and then it kept climbing, which was frustrating, to watch.
Yep.
But just recently, their stock price went below what I sold it, so maybe it'll come back up. But so I did take in some profits on both of those. Um, and then Tesla, I kind of broke even and reallocated some of those funds.
Okay.
So AMAT, no changes, kind of kept that position. TSM, I just DCA'd a little bit into that,
Okay.
grew that allocation. Um, Amazon, I DCA'd a little into that, and DCA, as you know, dollar cost averaging, where you're continuing to do recurring investing. Uh, Palantir, little, it's been up and down with Palantir, but I was able to reallocate 40% of my position when it was higher. Now I'm only like 1.3% up, but I was closer to like 15% up when I shaved that 40%.
Okay.
So that was good, but I rebalanced that, and you'll see I invested into a few more stocks and some ETFs. But continuing the list here, Qualcomm, I no changes, maintain my position there. It's been doing great.
Hmm.
Um, CoreWeave, no changes there. That's been up and down as well. And by the way, this I'm sitting at 30.7% profit. That's after a pretty big pullback this week. So I got in a decent time with CoreWeave, though it was bigger,
Yep.
the profit. And then NVIDIA, which is kind of a crazy, it's the best company that's doing the best, having the best quarterly results, and yet it's, I think it's being plagued by being the top dog. It's just not able to break out or go beyond 200 too long for too often. So
Yeah, the dividend's going to be interesting there to see
yeah,
how that pays out. I know for me, it's pretty hilarious to go from like the penny that it was before to now 25 cents. I mean, that's a big increase on that one. But these are times when we have massive pullbacks that I'm glad that there are companies like Nvidia out there because they just don't get hit as hard. I mean, they did pull back pretty quick,
right,
but yeah, it has been really frustrating if you have been an Nvidia shareholder because it seems like it's been basically trying to break out, but just can't quite do it for some reason.
right. And then maybe people are already trimming profit to have some money for SpaceX or something.
Right.
Um, by the way, I am showing zero point zero 0.02 because the brokers are still showing that. I'm wondering if they're not showing the 25 cents till it is past its dividend date. I'm not sure, but
Yeah, I think some of the platforms will not update that until the new payout goes. So that's probably what's driving that.
I see. Okay,
Yeah.
so that's Nvidia. I got a little bit of a dividend deal, but at the smaller rate. And then ServiceNow was an added it on May 14th. Um, and this one has been good overall, although before this pullback, it was doing a lot better. But I have a small position, not too small, by the way. In the allocation, I've highlighted all my positions that are over 10%, in case you're wondering there.
Got it.
Uh,
Okay.
yeah, but now is just a small position, but it's been doing a lot better till this pullback, and then it's still doing pretty good, but I don't
Yep.
have a big allocation. Um, Google, I DCA'd into um, Google recently, as you see, and it had a dip, so I took advantage of that and invested a little bit more in there. Not a huge portion, but it's about 5% of my allocation.
Hmm.
And then, if you recall, just recently, earlier last week, um, bad timing because it was right before the earnings report. I um, took a position in Broadcom.
Oh, okay. I mean, This is a good learning for everyone of
Yeah.
even if the company seems like there's no way it could not hit, there you just never know with
Yeah.
earnings.
Right.
So I whenever I'm investing in a new company around their earnings, I just have to admit that there's basically above a 50% chance that it's the wrong time to buy. And
Hmm.
so my general advice, if you do have a company you want to buy around earnings, is figure out how much money you want to invest in them, put a little bit in before and put a little bit in after. So that
Mm,
way you feel good that like I didn't go all in and miss it. And because if you miss it, it feels way worse than if you hit it and you're right. So
right.
that's always been my general advice when it comes to investing around earnings. But in general, we try to avoid earnings for this exact reason.
Okay. Yeah. Well, lesson learned, but not to mention the pullback this week too contributed to it. But that being said, as we know, Broadcom's an amazing company. I think
Yeah, I'm a big fan.
it's in numerous of your videos, including the dividend tier list that you we just released a couple weeks ago now, uh, where you have it as an S tier dividend stock.
Yeah, I mean, with all of my research, it's kind of wild when you start looking at how much they've grown their dividend. And it's easy for people to forget that before AI came out, Broadcom was kind of a straightforward company that was, not growing huge. But then their ability to make these custom AI chips has completely changed their business.
Mm.
So there's nothing I like more than getting a nice dividend while being able for the underlying stock to increase so quick. So Broadcom has become one of my personal favorites for sure.
Yeah. Yeah, great. So that's Broadcom, and then Zeta is a new company I invested in. Very much involved with AI. They do a lot. They have good fundamentals. They're profitable. They're growing. They got strong revenue forecast. So I invested in them, and in a timely manner where I definitely benefited, and the stock has gone up quite a bit just since from my May 22nd investment. So sheepishly, it I went a little too. What I have been struggling with is investing into something, but something that I have conviction on, but a small portion. And
Yes.
so the gains, like for instance, AMAT, part of me wishes I went 100% into AMAT, right? And be sitting at 106% um, profit there. But
Right.
so some of these other ones, I just said, you know what? Instead of spreading a lot out and thinning the amount per each, I wanted to do a little bit more of a solid amount here, which, and then with the profit, it quickly went beyond kind of the guardrails of a 20, no more than 20% into one individual stock, as you have guided me. But anyways, that's a little bit of context there why you're seeing that 31% allocation.
Yeah, I like the idea more, especially as you are getting started, of not spreading your money out too much. So again,
Mhm.
we do want the stock list to not get too crazy
Yeah,
because to your point, you're going to eventually get to the point where you're putting almost no money in it, and it's almost not even worth if it does go up. So it's important to do your research and figure out where you do want to place your bets.
right.
I obviously you know what I'm going to say that we need to reduce the Zeta for sure, and you can just accept that that was great timing, which it's amazing. But do you really want that to be the core bet that you're making across your portfolio? I would guess not. I mean, you can tell me otherwise, but I think you've learned a good lesson there that it's okay to place bets, but we have to be really careful on how big of a bet we're placing on them. And you got lucky this time that it seems like it worked out so far.
Yeah, you're right. And even though I felt good about the investments, I probably went a little bit more aggressive than I should. And to your point, if if it had gone down instead of up, it would be that much more impacting and dramatic and drastic
Right.
on the negative side. So
And again, that's why we want to really max it out at 20%.
Yeah.
Because when you start getting above 20% is where that stock starts overly affecting your total portfolio. So if you've got 31 of your percent and your money in there and that stock drops 50%, that thing could crater the rest of your portfolio, and the
Right.
rest of your portfolio might have been good bets. So that's why that 20% rule is a really good one to keep in mind.
So, excuse me. My moving forward thought is I don't necessarily want to sell it, but to balance it out, is it the thought just investing into other stocks into the portfolio to grow those positions so then it normalizes?
Yeah, I mean, that could be an option. The question is, with all of the turbulence we've talked about, do you think that that gain is going to be continuing to hold? I personally don't know very much about
Yeah.
Zeta, so I can't really speak to the quality of the company. But
Yeah.
to me, when I look at the rest of your list versus a Zeta, like it's definitely like the outlier among those
Yeah.
stocks.
Right. And part of it, it was like, okay, it's kind of software and um, some business stuff. I thought that's going to diversify against chips, semiconductors, RAM, those kinds of things. And so that's why I picked it as well. But to your point, I could lock in some of those gains, though it impacts capital gains taxes a bit, and trim that and rebalance it, right, is another option.
Yeah, so I mean, taxes are a big impact here. So that's one thing, and why I'm a big believer in long term investing and having a strategy going in. Because if you don't have a strategy and you start chasing any FOMO, what you can end up doing is realizing, oh man, I didn't mean to do that. And then you sell, and then you're paying really high taxes versus a long term investor. And that's one thing people overlook is the taxes piece
Right.
that you have to keep in mind.
Yeah, that's fair. That's fair. So these are the stocks in my AI portfolio. Some changes, some learning lessons there, and some adjustments that I'll continue to apply to refine this. I think it's pretty darn good though overall, with a little
Mhm.
bit of some corrections. I like the existing stocks. Um, the ones I'd probably most nervous about would be, this is just my opinion, CoreWeave, Palantir, and Service Now. But curious your thoughts on where the you see the biggest risk potentially in this portfolio.
So we've seen a really big run up in software
Mm-hmm.
stocks. So I think anything software related. So if you're saying Zeta's in part of that, I would put that as part of the where the risk could be. So for sure, ServiceNow and Palantir are good call outs. CoreWeave is just more of the neo cloud play that has high upside, but it's also been on a pretty good run recently, so there is just more room for that. So I agree; those would be the key ones that I would see play out as more at risk here. And the great news is, really, other than Zeta, the other ones are kind of properly allocated throughout their portfolio. Where if they go down some, you have some other places that could make up for any declines there.
All right, so those are what I refer to as my AI tech portfolio, if you will. It's my own ETF in this category.
Sure.
Uh, though I kind of wish I dropped it all in AMAT a couple months ago, but there you go. A little bit of chips, a little bit of semiconductors, a little bit of software, a little bit of Neo Cloud, and the surrounding companies. Any high level thoughts to close this part?
Yeah, I like all the pieces that you're touching within AI. The stocks that you DCA'd into, with TSMC and Amazon, I think those are really well positioned. The only other issue or the only other thing that I would recommend, like we talked about already, is reducing Zeta is what I would recommend.
Mm-hmm.
And I would also then think of like, is there any other parts of AI infrastructure that you are missing right now? So right now you've got chip makers, you got cloud, you've got the chip designers, you've got a little bit of Broadcom, which is like photonics and custom chips. So you're doing really good with chips and really good with the cloud. So are there any other pieces and manufacturing. Are there any other pieces that you think you're missing out on within AI that you could then move that money to? So is it like a power play? Is it a different infrastructure play? But other than that, I like, oh, and you also have software. So you've got basically three of like the big five layers, I would say, of going on.
Yeah, the one that I am intrigued by that you recently included in your post NVIDIA earnings video, what to do now or what, what's happening after that NVIDIA earnings. I'll put it up here so people can see. But you talked about um, two new companies that I had not heard of. One was something energy, Nextera Energy, I think. So
So
I have,
Constellation in that one.
right. And so I am thinking about that. I probably should talk to you before I pull the trigger, but that's on my mind as well as my potential next allotment.
That's
But
great. Yeah, because I'm a big believer, and I think that the power is going to be one of the major choke points that we're going to be running into as we continue to build all these out.
right. Yeah. So, anyways, thanks for taking a look at this portfolio. Hopefully, next time I report, we'll be past this SpaceX IPO and the market will have course corrected back up into gain, gain, gain. I don't know.
Well, yeah, let's hope that that's the case for
Yeah.
there. And yeah, again, it's always fun to see and check in on what has happened since last time.
Yeah. And again, though, um, it's funny because a lot of people in the market now are looking at the AI opportunity to make a quicker buck. I'm trying to maintain that balance of I'm really not looking to pull any money out for 10 plus years. And so you just got to have, what do they call it? Those diamond hands, if
Got a
you will.
diamond hands it. That's right. And I'll tell you what, if we go to the depths of hell here soon after the SpaceX thing, that's it's part of it. That's what happens in investing, and we'll be here to talk about it.
All right. Well, we'll see how my one share of SpaceX does.
Let's hope you get allocated.
Yeah, that's even if I get allocated, right?
Right.
Because I'm probably in line and I may be way in the back. Well, Alex, thanks for sharing your feedback on my AI tech portfolio. We'll continue this periodically, do a quick market update, and check in on the portfolio. I encourage anyone listening to like and subscribe so you can be aware of that as those get released. Thanks for your time, Alex.
We'll talk to you soon.
All right. Have a good one. Ciao.